All right, let us look at this here, which is your information relating to Nesta Limited, extract from the statement of comprehensive income or the income statement for the year ended 31st December 2019. We are given cost of sales of 3,300,000, depreciation is 57,000, income tax is 313,600. One thing that is relevant here is your depreciation. You will simply use that in two notes. You will simply use that in note number one, which is reconciliation between profit before tax and changes in working capital, as well as when you calculate whether you have an inflow or outflow from investing activities. We're given the following extract from the statement of financial position, i.e. the balance sheet. So in the balance sheet, note that we're given tangible assets. For now, I'm just going to focus on what will be in note number one, which is your inventory, trade and other receivables, as well as trade and other payables. For your inventory, realize that there's a question mark for this year, but you were given inventory for last year, which is 382,000. And the one for this year is missing. So we just have to check what is it that we are given that will enable us to calculate inventory for this year. Now let's just quickly look at the extract from the notes of the statement of financial position. I was simply extract from the notes today. Financial statement as at the 31st of December. We are given trade and other receivables as well as trade and other payables. Please note that for trade and other payables, we are simply given 280, well, it's 234,000 as well as 206,200, and trade and other receivables, it's 148,000 as well as 127,800. You just need to remember that we need to exclude sales income tax as well as shareholders for dividends in these two notes, especially when we're preparing note number one. Just note that when you get to trade and other payables, you just need to exclude sales income tax as well as shareholders for dividends, as those that must be shown separately. Do not exclude sales VAT. Okay, do not exclude sales VAT. You just exclude sales income tax as well as shareholders for dividends. As I said, those will be shown on the face of your cash flow statement. Let's go to the next slide. In the next slide is simply giving us more information about well, there's additional information relating to Nesta Limited. We've got a loan statement which reflected the following on the 31st of December 2019. It reflected interest on loan of 50,350. That will go to note number one. And then they said Nesta had issued 1,350,000 shares on the 1st of January 2019, which is the beginning of the year. We actually sold additional shares during the year at 3 Rand per share, which was on the 1st of July. No shares were repurchased. So we know that financing activities increased by the number of shares that we issued multiplied by the 3 Rand. Then they said Netstar declared and paid interim dividends of 30 cents. So that will depend on the number of shares that we have declared by the first, or the number of shares that we have issued by the 1st of September 2019. All shares qualify for these dividends. And they said for the period for which the closing, they said the period for which the closing stock on the 31st of December 2019 is expected to last is 73 days. Immediately when they give you that, when they talk about period for which closing stock is expected to last, they're simply giving you a stock holding period. Now, in that scenario, obviously, the stock holding period will have one variable which will enable us to calculate the value of closing stock for the current year. Let's get to it. First of all, I'm going to put in the depreciation value. I did show you where it was simply given to us, and it was given to us as an extract from the statement of comprehensive income. We also have interest, which comes from our loan statement I just showed you now. When you add these two, it will simply give you adjustments in respect of. To work out what your profit before taxation was, you will simply take 1,134,350, you minus 107,350, and it will give you a taxation profit before taxation, which is 1,027,000. Just need to add one more zero to that. Now let's get to inventory. We don't have inventory for the current year, so we know that we are given stockholding period. Now, this is the formula for calculating stockholding period. Please note that it is equals to average stock divided by cost of sales. Average stock is this year's closing stock plus last year's closing stock divided by 2. Please note that you have an option of just using this year's closing stock and then you divide it by cost of sales. So you'll realize in the formula sheet you're given both formulas. Our question is, how do you know which one to use? The one that I prefer is simply the average stock. And I've realized that in most people, they normally use closing stock. So you can use closing stock divided by cost of sales multiplied by 365. That will still give you stock holding period. Okay, according to me, the average stock is the accurate one. So hence I decided to use average stock. But even if you use closing stock, obviously your value will be different from mine. If you use the closing stock all over cost of sales, it'll give you a different value to what I'm going to get. But I simply use the average stock. So stock holding period, they gave it to us as 73. So I substituted 73 with the stock holding period. For average stock, I simply said it's half into X. X represents this year's closing stock plus last year's closing stock. We divided by cost of sales, which were given to us in the extract from the statement of comprehensive income. You multiply this by 365. Okay. And then all I did was just to multiply both sides by that 3,300,000 to get rid of the fraction. And then I divided by 365. And then I'm going to multiply both sides by 2. And when I multiply both sides by 2, on the left-hand side, I'll be left with x plus 382,000. And on the right-hand side, I will simply have the whole fraction multiplied by 2, which will give me 1,320,000 on the left-hand side. And you just have to solve for x here. To solve for x, you will simply transpose that 382 to the left-hand side. It will give you 1,320,000 minus 382,000. It will simply give you x as 938,000. Please note that that is our trading stock for this year. So our inventory for this year is 938,000. For last year, it was 382,000. It means that our inventory went up. When inventory goes up, it results in a cash outflow, as it means that we purchased stock. When it comes to trading other receivables, I did specify, make sure you exclude SARS income tax if it's included. So for the current year, we had 148,000. For last year, we had 114,400. So this year's trading other payable receivables is greater than last year's trading other receivables. That means that our debtors purchased more on credit. They did not pay us, therefore resulting in a cash outflow. We lost cash of 333,600. When it comes to trading other payables for last year, it was 160,200. This is after excluding SARS income tax as well as shareholders for dividends. And then for this year, it is 149,800. You realize that our trading other payables have actually went down. If it goes down, it means that we have made a payment, and the payment will result in a cash outflow of 10,400. You add everything here, it will simply give you your changes in working capital of 599,000. 1,134,350 minus 599,000. It will simply give us cash generated from operations of 535,350.